everybody, welcome to my new weekly review. I will go over GBPNZD, which was a loss last week, and USDCAD was a break even. So the first one, GBPNZD, which was a trading error. So I will go over the daily first. What I could see on the daily was this first leg, second leg, third leg, fourth leg coming back, the bullish M. And what I was seeing here is that this bullish M is still coming impulsively to the downside back then. But actually, we can say also that this bullish M is a corrective bullish M because you can see here these candles are not that big. You can see here then the A, B, C correction, which we were entering here on that candle because we tapped that daily supply and demand, so acting as resistance here, support, support. So this was a clear trade. But if I looked on the 4 hour, we saw here really corrective nature, then impulse correction against that major 4 hour bearish trend. We tapped the supply and demand zone here, and we went to the downside. And then I took here the deceleration, and it didn't play out. It went to the downside because also that weekly was also not aligning for me. So if I go to the weekly, what I saw was back then a 1 out of 4, and a 1 out of 4 is actually now a 0 out of 4. I put it my horizontal line at this daily supply and demand zone. I saw here resistance, resistance, and back then also here some support wicks. If I look more further back, you could also see here the buyers, we are closing at this zone, buyers kicking in, and almost tap at that zone with the support wick. But it's not really the convincing zone, and why we went lower is to tap this previous structure high here, acted as clear resistance here, also that resistance, which act now as a support wick. So this was the better supply and demand zone. Even if you had 1 out of 4, it was not a trade to take because with the bullish M we need 2 out of 4. So the candle was here against us. The fib from this low till this high. We had a fib completion here, aligning with the supply and demand zone. I see that could hold the price down. So the fib was against us, the supply and demand zone also. And the trend for me a question mark because it's the first time break. So actually it's still bearish, but you can also see it bullish. For me, if my trend is depending on my criteria, then I will see that as a question mark. If the trend is not clearly for me, then I will say a question because if we had here 1 out of 4 supply and demand zone was okay back then, and then the potential trend was for us, then you have a potential 2 out of 4. So this trade will depend on my trend, and it's not really a convincing bullish M. It's just the first time break of this previous uh, lower high. So this is the break of it. So it's actually still bearish. But some people say bullish. That's why I will see this as a question mark because it's depending on my criteria to take it or not if I see it right now. So yeah, this was the trade. Diesel, daily bullish M corrective. We could not take it. It was a trading error. So yeah. Then the next one, USDCAD, was a break even. This was actually a retrace or a hedge position. This was the deceleration on the 4 hours. So actually this was a good trade that gone bad, just a break even. So I will go over the daily. But I saw here, I need to copy it. So I will go over it here. I will copy it here like this. Then it would be the right one. Yes. Okay. So daily, weekly, and 4 hour. Then on the daily, what I saw was a retrace. We had a fib completion from this low till this higher fib completion, aligning with a nice daily, nice full candle close. So that's the criteria we want to have, and a daily supply and demand zone, which we had on the weekly, the supply and demand zone here. So this can also work for us. So we were looking after that candle close to pattern, and on the weekly here, what we saw was a clear supply and demand zone here, acting here as clear support, resistance when we are below it, again, when we are below it as resistance, when we are above it as support, when we are below it, just didn't tap it as um, a touch. But for me, it's really close, so I will count that as a resistance here also. And you can see it when we are above it. We tried to push it back to the upside, but we couldn't. So this could be your supply and demand zone. And the criteria we have then is a supply and demand zone and a fib from this low to this high. We had the fib completion here. So this could work for us to have a potential false break of this previous lower high. So we could have a false break with a candle potentially coming back to the downside, which we didn't do, of course. But it was a trade followed by the plan, and the rest was against the candle close. This one was bullish closing after that supply and demand zone that got tapped. We went to the upside, and then the trend is just a question mark. It can also still be bearish or bullish. You could see this as your bullish M first time break. It's still bullish. Or you can see this as your bearish W first time break and it's bearish. So that's why I also marked here a question mark, but these are the two criteria that are already for us. So for me, that short is good to go. Then on the 4 hour, what we received after touching that zone, we received a diesel, first candle, second candle, third candle, and then the fourth candle we could be in. The limit was set, and the price went correctively to the downside. You can see this is a bull flag, sorry, a bull flag. We went to the upside. We could go and break even here, so it was a break even trade. So good anticipated on that one. Then I will go over the missed trades I took or I didn't took. And these are a lot, actually a lot of trades I could take. So I will go over the first one, Euro AUD. So the daily, weekly, 4 hour. This was a winning trade. You could take here 2.5% out. So why I didn't took this trade was I didn't took the fib from this low till this high, and you had here a fib completion. So why I was looking at it also was because we had here a bullish M. We are still in a bullish uptrend. So this is your third leg. This is your whole fourth leg. And I saw this then as a big bullish M. But I didn't saw then the fib from this high to this low. And this was a nice daily candle close. So this could be the retrace that you could trade or a hedge position, something like that till this daily highs of that I see here where the supply and demand zone is sitting where liquidity can be taken to go back to the downside, which we did then. So really nice to see that part. So the criteria was there. We had a daily full candle close. We had a supply and demand zone here, buyers here, also some sellers. So good to go. Then we had a fib completion. And if I go to the weekly, what I saw on the weekly was a 3 out of 4. Only the candle close here was against me. We had still our trend that is bullish. This was a previous low. This is the high. You can see also impulse correction, impulse potential correction. We can go back to the upside. We had a fib from this low till this high, or this low till this high. You could also have the natural M, same highs, same lows. This is just a fake out. We didn't close below this higher low wick, so this is still valid. And the supply and demand zone here, we are having here some nice support wicks, resistance wick, support wick when we are above it. And here we had a nice support wick. We could go to the upside, which we are closing that week. So really nice to see that. So 3 out of 4. And then on a 4 hour, what could we see? This was a deceleration we could take. I was actually sleeping because I was standing with the morning shift, but if I was awake around 5 in the morning, I could actually take still this trade because around 7 this trade was triggered here. And then, yeah, the break-even point was a little bit higher, so we could still take the limit, which I didn't do back then. I was tired And yeah, I must do it actually. That's just feedback. So and it went to the upside for around 2.5%. You could take here 2.5% out. And here was the daily TP I would set on the daily institutional candle highs, Burj W. So this was the trade. Then the next one, GPY. So daily, weekly, and the 4 hour. So I will go over the daily. What I was looking for here was the lows of this bullish M. So this was a clear resistance point, support point, potential support point. And here were the buyers kicking in and the resistance also. But I also drew my zone at this daily IC. You could see between a 61.80 and a 78.60, we had our daily zone. And also between this bullish M, first leg, second leg, third leg, fourth leg, we have that IC sitting. Between all the blue candles here, you have one red candle. And this is working like a magnet, and there can be sitting liquidity. And I was afraid of it. I was too much focused on these lows where liquidity can be found. You can see that. But the wrong thing to see was, okay, we could go to the lows. That's normal, but I must look at the IC. The power is also sitting at the IC, and I found that IC was also big. So yeah, I was a little bit afraid of that IC, and that was wrong to do because the IC is still fitting in that FIB levels from the 61.80 till 100, so it's closing in between. So then I drew daily zone. This was already drawn, and on the 4 hour, yeah, you could see we expected, or we get it here, diesel. First candle, second candle, third candle, fourth candle, you could be in here. And this trade could be running around 2.2%. So it didn't tap my 2.5% TP. So it would be a break-even trade for me. If I go to the weekly, you could see it was 4 out of 4, potentially for some people, or 3 out of 4. But for me, the trend is bullish. We are making higher highs, higher lows. So a bullish M. Plus, we have here that candle close nicely acting as support here from the previous resistance support. So the supply dimension is also working for us. And the FIB from this low till this high can be working for you. So when we tapped here, then the 61.80 around that point. So this is also for us. So this was a trade for our diesel daily bullish M IC, and we could take here the trade. So then the next one, Euro GPY on the daily, weekly, and 4 hour. So on the daily, this trade was a natural M. We had here the same highs. We could see here the same lows, which is nice. We are also still in that bullish trend. So we could potentially make here shoulder one, head, shoulder two. It's actually an indicational bullish trend with that bullish M. So a potential pattern within a pattern, but we made already a pattern there. The shoulder one here, head, shoulder two, and then here that natural M, same high, same low. So we must look first at that pattern, which was also a mistake of me that I wasn't looking earlier to that, but I was also sleeping at that time because this trade was also a deceleration trade on the 4 hour. You could see it here. We tapped the daily zone. We have one, two, three, fourth candle. We could be in here. Then this trade went on break even to 1% rule. We reversed from this previous structure. This was a high, low, high, low. We rejected on this previous structure low, and then we went to the downside. So I could not take this trade because I was sleeping at midnight. So actually, this was a trade I couldn't take. And on a weekly here, still a 4 out of 4. For me, the candle close was for us. This blue candle here was closing bullish. Then the trend still bullish. This was the previous higher low wick, higher high. You could see it, we didn't broke it, and then we are making impulse correction, impulse correction, impulse. Same high, same lows, natural M on the weekly. And then here, acting here as resistance, support, supply demand zone for you. And then the FIB from this low to this high, working for you. 61.80 was aligning here, something. So a 4 out of 4 to go for that long. The 4 hour was clear deceleration, and the daily was at natural M. So this was a trade I was looking for. So the next one right now. Then we have NZD USD, the daily, weekly, and 4 hours. So we start as usual on a daily. And what I saw here was an pullback trade. We were trading here in a bullish trend, first leg, second leg, third leg. We already made a bullish M, so we could expect to come back to this IC, and we went immediately to the downside. So this is a first time break. This is just an indicational candle or indicational trend change for a potential shoulder one, head shoulder two, which happens a lot with pullback trades, fake outs that we want to tap. Again, not shoulder one, but we tapped here that IC because the power is sitting at the IC here. You can see we tapped the low of that body and then we went to the downside. So what is the criteria with the first time break? We need to break that previous higher low wick, which we did here with that candle, and we want to see a buying zone. And where was the buying zone here? That shoulder one had shoulder two, which could push the price a little bit to the upside till that IC zone here, which we did. And why I didn't took this trade was on the 4 hour. We were also, yeah, around midnight here. This was around, I will look. This was at 3 a.m. in the morning, so I was sleeping with the early shift. The morning shift I was standing, so I couldn't take this trade, and this could be a break even, and the price went then to the downside. And if I go over the weekly was a 2 out of 4 that you could take. So this was only the candle close. This one, this bullish candle close, was grabbing liquidity from this monthly inversion and shoulders. And then the fib from this high to this low was a fib completion around here. So this was also working for you, a 2 out of 4. Then the next one was AUD USD. It's also USD pair, and this was on daily inversion and shoulders. So I will open the daily, weekly, then the 4 hour chart. So if I go over the daily right now, why I didn't took this trade, I was looking at it, but my conversation was that we had here the same highs, so we can expect the same lows, where there's also some liquidity sitting at that lows. But I saw also that we could take here that shoulder one, where there are a lot of buy wicks. You can see buyers, buyers, buyers. Here again, buyers we closing above with the false break, and then here potential buyers again, which we were holding for short term, and then we went to the downside. So that was the only thing that I was afraid of to take. Actually, we could take it if we had some more winning trades. We were in a winning streak, then I could take this, but I didn't want to risk it there. So on the weekly, yes, on the weekly, I had here a 3 out of 4. So for me, the trend was still bullish. We had here first leg, second leg, third leg, and then the fourth leg closing below this previous higher low wick, which is a first time break, which is still an indication. And this was aligning also with that shoulder one of the monthly head, shoulder two. So for me, this was still clearly bullish. And we didn't tap also that shoulder one, head, shoulder two here. So we just didn't tap it here. But I expected one more tap of that zone potentially, and we didn't do that. So we went to the downside. But the trend was positive. The candle close here, this bullish candle close, was also bullish. The fib from this high to this low is against you. It was almost tapping it here. So for me, it's, yeah, can be working against you. And then the supply and demand zone here acting as support, resistance, resistance, support. So this is supply and demand zone that can work for us like that. 3 out of 4 or a 2 out of 4 if some people say that this is and bearish trend when we close below it. So that's why I also here had the 2 out of 4 to be sure that's a confirmed 2 out of 4. So daily inverse and a shoulder. So then I will go to the 4 hour. And on the 4 hour, what did we see? We had a nice deceleration. One, two, three, four. Nice decel. We could go to the upside, and this would be a break even because we went back to the downside. So this was a break even trade. Like that. Then the next one, AUD/USD. This was a scale in. So if I go to the 4 hour, it's just the weekly same criteria, daily same inverse and shoulder. So on the 4 hour, you could see we potentially could take here a bullish M, first leg, second leg, third leg, fourth leg, and we had that 4 hour minus 27 of the fib from this low till this high. We could go and break even, and then this trade was almost tapping my 2.5% trade around here, something like that. And then the price tapped our break even point, and we went then to the downside. So this was a good trade you could take if you had some winning streaks or winning trades. You were positive, then this trade was still good to go. The next one, get CHF. This was a winning trade. The daily, weekly, and 4 hour. So what is the feedback from me on that trade? I didn't follow that trade too good. I was missing the trade on the 4 hour candle close, and I was looking at it. I analyzed it. This was a good trade. A daily head and shoulder. Shoulder one here, head, shoulder two with the first time break. We didn't trigger some buyers here, so I couldn't look for a pullback trade still at shoulder one, but then was the only option the head and shoulders. So we had it here, and on a 4 hour, we had a nice diesel. So I saw here first candle, second candle, two candles in between really correctively. For me, not a really big push to the downside or something. So it's still clear to count. So one, two, three. And on the fourth candle, I could set my limit and we went to the downside for around 2.5%. We could take out and it's still running for mostly of the people normally. So that was that trade. And then on the weekly, I had a 3 out of 4. If I put my horizontal line there, we had here nice resistance. If I look more back, we had also some support. This was also nice here when we are closing below it as resistance and it triggered sellers. So my screenshot is not going too far back in history, but it was a clear supply and demand zone and aligning with that with that candle close here that pushed the price to the downside, closing bearish. And then the fib from this low to this high, we had here a minus 60 array, minus 60, 80 around that region. So this is also clearly bearish criteria sign. So 3 out of 4 to take that short. And then this was a diesel and the daily was a head and shoulders. So this was a clear trade. Then USDCHF on the daily, weekly, and 4 hour. This was actually potentially a trade that you couldn't be in. So if you round it's well off, then you could be in straight because it's a retrace trade. So we had a fib completion from this low till this high. The fib completion is here with a nice daily full candle close with just a small wick coming back a little bit below, but it's still clear to go because we triggered that weekly sellers here. And on a 4 hour, what did we do? We had a deceleration, first candle, second candle, two candles in between, which is okay. It's just decelerating still, then the third candle, and then the fourth candle isn't tapping that deceleration. But if you round the price off to the downside, then you could be potentially in this trade if the spreads didn't trigger you in potentially. The spreads could prevent to trigger you in a trade potentially. So yeah, but this could be a 2.5% trade that you could close. And on the weekly was here the 3 out of 4. For me, the trend was still bearish. We had a high, low, high, low. This was a major bearish W. And we were at this major supply and demand zone acting here as support, resistance, resistance, potential resistance. that the sellers came from, which we did with billions of sellers here. So a lot of people were selling and buying also at that zone. So this could be a sell region. So the trend is actually for us. I don't know why I put it here, but this is actually 4 out of 4 then. So the trend was still bearish, then the candle closed. This is also for the short. This candle closed really bearish. This is also for us. Then the fib from this low to this high with a fib completion, and also this fib from this high to this low is a major big fib that is holding the price down. And then the supply and demand on here, 4 out of 4 to take that trade to the downside. Then we will go over the last one. There were a lot of trades, 9 of missed trades. And this was GBPAUD daily, weekly, and then the 4 hour. On the daily, what we saw was a nice shoulder one. I had shoulder two. We had a first time break. We didn't trigger some selling zone with that first time break. This could be your weekly supply and demand zone, which got triggered. That can potentially a trade, but I want to see it on a daily for that pullback trade. So I was looking at that inversion and shoulders. And what was the mistake I made here? That I had only a 1 out of 4. I wasn't counting that fib for us because I drew my fib from this low to this high. And yeah, the fib levels were around here, 61.80. But the mistake I made was that this was a clear same high, same low. So this was the natural M. So we could take the fib from this low till this high, and we just didn't close below this higher low wick. So the fib from this low till this high is still valid because it's a natural M fake out. So a lot of times with the fake out, it wanted to have the previous structure or to grab and head and shoulders or something like that, which we did here. And yeah, that was a mistake I made. So this was actually a 2 out of 4 with the trend that is also still bullish because you had here a low, this your high. We had just here a first time break. This is one leg, first time break. So this is still a clear bullish. So I could take it. And then on the 4 hour, what we saw was here after tapping this daily zone, we could potentially had here diesel, which we had first candle, second candle, third candle, fourth candle, and then we had 3 other candles to still be in a trade. So I could be still in a trade because this was in the morning around, yeah, it was around 12 o'clock, midnight. I was sleeping back then on a Tuesday, yeah, Tuesday, and I could set my limit around 7 o'clock when I was at work. So, but the only thing that was holding me back was the weekly criteria that I was saying. So, this was the weekly review. I hope you liked it and see you next week. Bye.